Mark, Bill, Michael, Steve, good morning. How are you? Give me 1 second. We invite other people to the webinar. On YouTube, welcome on YouTube. If you're watching the broadcast on YouTube, please hit subscribe button and like. Okay. Screen. All right, Discord is ready. Okay, so let's start. Martin, welcome. Bob. Yay, hurricane, no damage. That's great news. How was my night? Was Labrador? It was good. It was good. We're doing some training, so it's good. It's been a good experience. Dan, hello. Good morning, Fred, Faust. We lost my share screen. Let me know if the screen is shared. It should say live trading room. All right, let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Everyone else, please, thank you for investing time and being here. Really appreciate your time commitment. Disclosures are very important. If you're new to trading stock and options, I encourage you to visit the link on your screen to understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, very important, trading psychology. The goal is to become a disciplined trader. How do you do that? I think the key is to have a mechanical trading, right? Where you always looking for the same setups, you always trading the same number of positions, always the same risk per position, and rinse and repeat, right? To do that, I think you need to have a trading plan in writing, right? I have my rules in writing, right? Like, cash, right? We talked about cash, 30% portfolio in cash. 4 positions at a time, no more than 2.5 account value per position. Wait 2 to 3 days to confirm the trend change. Remind myself about ABC pattern, wait till end of day to make trades, trade liquid options, trade liquid stocks. So stuff, on earnings, don't trade options that don't trade in pennies. So, and then I would review the trading plan every day before the market opens, and I would journal. right? I journal every single trade, and I always grade myself, right? Self-awareness is extremely important. It's extremely important to, before market opens, to go, I do breathing exercises, I meditate, pray, workout, doing push-ups, whatever works. You have to get in the right mindset. Your variable heart rate has to be low, right? No, not normal, but within normal range. Self-awareness is important. Again, grading yourself, ask yourself why multiple times you want to get into a trade, and then grade yourself. If you did not deviate from your trading plan, you didn't have more than 4. Usually it's either you have to, at least for me, I either have too many positions or 2.5% account value. Other things I just might forget sometimes, like, sometimes I do trade earnings on options that don't trade in pennies, right? So sometimes I do deviate that, so I would record that, right? So stuff like that. But it's important to record it so you can review it and then make a decision, right? And grade yourself, right? If you follow your trading plan, I would put A and B. If you deviate from the trading plan, I would put C and D as a grade. And the goal is to avoid C's and D's, right? All right. The second one was, recognizing, try not to call the bottom or try not to call the top, but recognize bottoming process, top building process. Strike price selection is important, right? You always want to, the most important is position size, right? And strike price selection is a very big part of it. So we always do it before the market opens. Let's look at stock forecast toolbox. Support is at 441, overhead resistance at 449. Model basically says that we did break above 444 yesterday, so we had a pretty significant rally, probably a little bit earlier than I anticipated. Trend did turn positive, but model basically sees the market is overbought, right? And potentially can pull back below 444. So I think the best part of this rally behind us, right? We talked about seasonality, that usually towards the end of the August we have a pullback, then starting end of August, last week of August, we have rally, that can continue. So far the correlation has been high. I'm going to make an assumption if we don't have any new information, no big surprises on Friday in terms of unemployment data. What do we have next week? We have unemployment data Friday, and then what do we have next week? ISM services, initial jobless claims. So assuming there's no surprises, we reach, top. We start going through the top building process, September 8th, September 15th. So we could get to 453, right, very quickly. Right now we are trying to break through this broken uptrend, this line, and then the overhead resistance, which we spend, second half of July, is 452. So I don't think we're going to break through the 460 unless there is some kind of a positive catalyst. I'm not sure what that is. So assuming there's no positive catalyst, we're not going to break through 460, and core scenario we get to 453. Okay. Maybe a up and down price action. We stay above 454. Maybe a marginal break of 455, and then toward the end of September, another retest and potentially break of 432 level. So something along those lines, right? Kind of a typical head and shoulders. All right. So that's my view on the market. All eyes are interest rates. Right? 10-year yield is right on that borderline, 408. That's important, right? It's approaching 50-day moving average. So short term, again, yield is oversold, and that's where I think, if we drop below 408, I think that's positive. It means we can continue going through this consolidation process. Obviously, if we rebound back to 4.5, then the sell-off that's when the sell-off will start. So for now, I would watch interest rates. TLT is up, 10-year yield is down. 30-year yield is actually not that much lower. And dollar continues to pull back, right, which is also positive. So as long as dollar pulls back and yield pulls back, market is going to find some kind of range bound, maybe slightly higher, maybe slightly lower. And then I would watch for the yield to rebound. Once yield rebounds and dollar rebounds maybe towards the end of September, then the second leg of a pullback will probably start. Any questions? All right, so most people are still bullish, right? We have a pretty strong rebound, so most people are bullish right now. Okay. I mean, your first support is this broken overhead resistance, so that's your support number one. Right? So if you're short-term aggressive trader, 445, I do like the rule. You know, you want to at least have by Friday. If we're above 445, then this breakout is confirmed. Model actually says we could be at 441 today. I mean, okay, if we do have a reversal towards, I mean, what do we have? Based on some economic data, if we do have a reversal and we drop below 445, then we're in the range. But this is support number one. This is support number two. This is resistance number one. You know, resistance number two. So if you're buying, if you think we're going to get to 460, right, you want to squeeze 2 percentage point, 1 percentage, okay, fine. What's your stop loss? 445, right? You're risking 5, 6 points to make 5, 10 points. I mean, we could be at 445 by end of the day or by end of Friday or below. So if you don't like to make decisions on hourly basis or daily basis, then obviously very strong actually a 12-month support is 432, right? It's a failed breakout last August. We've retested this, so basically in 12 months didn't go anywhere, and now that would be the main support level. So if you buy the market at 450, 430, pretty wide stop level, right? We had a pretty impressive rally, so 20 points. I would say if you're thinking about days or weeks, 20 points on the $10,000 account, $250, it's 12 points, 12 shares. So that's, I would go through positive and negative visualization, right? You buy, then you visualize that we are retesting the highs, 460, because you think NVIDIA is going to continue the rally, right? Had an impressive rally. Bitcoin yesterday had an impressive rally. So you visualize in 460, positive scenario, right? Make it as real as possible, document it in the journal, and then take a pause, drink a little coffee, and then you visualize that the market, you know, retesting 430 by end of September. How do you feel? You know, how many positions you have, how many shares you have, and then what decision you're making. So very important level. Meanwhile, model sees 449, 441. We're trading slightly higher, 450 market open. Small caps a little bit lower. Technology flat, right? Value stocks are flat. Let's see anything else interesting. 2-year, 3-year actually turning positive. 10-year yield is dropping. Kind of a muted reaction so far. Okay. Any questions? All right. Trading is a microcosm of life. I like that, Mark. Remember that? Okay. All right. So let's see. Let's review the positions. Oh, HPQ. So HPQ, if you did do the earnings we talked about last night, I did say, you know, I did do the call. I sold the call spread in my personal account. Didn't want to do it in because of the volatility. Didn't want to do it in the trading block, Tradespoon or yellow tunnel accounts, and it is down. And surprise is to the downside, right? So still, what we discussed that, you know, people are not buying computers and laptops and, you know, printers as much as everybody anticipated, right? That cycle of, you know, hasn't started of upgrading the some of the hardware, especially on the personal side. And you can see HPQ pretty sharp move to the downside. PDCO is also in the earnings. It's one of our positions, one of my positions. I also said, we could be down 10%. So for position size is extremely important, especially into the earnings, right? So if you're down more than 2.5% because it broke through this 31 level and it's 29, I would exit position, right? If you did only half of the position size, right? If you only risk $100 and you're down 100, I mean, it reached 200-day moving average. I mean, earnings per share was in line. They did miss the revenue by $10 million. So I think 10 by 10%, not by 10%, but expectations were down. Revenue expectation missed by 10%, but 10 million on I think $1.7 billion revenue. So it's not a big miss. So now you can wait, right? If I'm down $250, I have to decide. Probably wait maybe because we could rebound and try to close the gap, right? That's one scenario. Another scenario, we could continue, break below. But usually 200-day moving average is a good support. The gap is usually good support. So, if you're not down $250, I propose you wait till the end of the day, wait tomorrow and see what happens, right? If we continue to break down and trading below 200-day moving average, well, the next level of support, 26. You probably don't want to wait till 26, right? If the 200-day moving average holds, and Friday we're still above 200-day moving average, it could be one of those exactly, I mean, the stock is up, so every stock that misses earnings gets punished. It did go from 25 to 35, right? 50% rally. So any negative news, you do get a surprise. The stock gets punished. But obviously, it's that would be my thought process. And not the most liquid stock. Only less than 1 million shares traded a day. All right, so that's PDCO. What else? AT&T continues to trade higher. NVIDIA rebounding. Eli Lilly continues to rally. Clorox slowly going up. What else? Apple is up. Regional banks are down. Again, the higher requirements for their deposits. How much cash they have into their account, and obviously that constrains their cash flow and how many loans they have. So banks are under pressure, especially regional banks. Let's see what else. That's about it. Let's see any other surprises, big surprises. China is down 1%. It's been volatile. That's about it. Okay, any questions? Selling credit put spread in UNG, Fred. Okay, thank you for sharing. Yes, UNG has been volatile. The idea that the winter might be colder than the last one, and looks like it's trading kind of not going anywhere. So yeah, selling credit put spread has definitely worked well. Anytime you see a pattern where it's market neutral, right? It's not really going higher, not really lower. This is where you can trade your either iron condor, or if you're bullish like Fred, then you sell credit put spread. Thank you for sharing. All right. Any other questions? All right, so looks like AT&T is not a stock that we've discussed before. Looks like it continues to trade higher, rally. It's reaching this gap, so I would watch carefully to see if it breaks through this level. I don't know if you guys have any questions. Just watching HPQ. So the question is, Jeff has a question about LRCX. What's the likelihood of LRCX breaking out? First, the answer is SMH, right? Probably, if you know, I mean, LRCX can have an individual news, right? Positive surprise. I can't really predict if it's going to have a positive surprise and when. Usually it happens during earnings, right? But there are some pre-announcements. So again, kind of this idea of inverse head and shoulders. Not inverse, but is it inverse? No, it looks like head and shoulders, right? Sorry. So head and shoulders, right? So what's the likelihood that it breaks? Usually these patterns, they hold, right? So 70% of the time, when you see these head and shoulders, when you look at other data, 70% of the time it does this, 30% of the time it breaks out, right? Based on head and shoulders and this multi-month pattern. Usually that's the, you know, all data aside, right? Forget any, you know, if generative AI comes in, then chart patterns don't matter, right? Chart patterns matter when there's no new information that can take you out of the range. So that would be my setup SMH. You know, I'm bearish on technology. I think we could continue going higher. I still don't think we're going to break this. You know, I don't think we're going to have this, right? But it doesn't matter what I think, it's what everybody thinks, right? So I think based on seasonality, we chop along and then, you know, pull back. Let's look at LRCX price pattern and see how different it is. It had a strong earnings, right? It gave up all of its gains, right? It traded below 50-day moving average for a few weeks. Now it looks like it closed this gap, right, in trading. So it's not that much different from SMH, right? So the fact that it was below 50-day moving average, it gave up all of its gains after the earnings, right? And it's already broke to the support line. I think the stock is weak. So best case scenario, I mean, I guess it could retest 720, maybe even marginally break. You know, I think classical pattern, we don't, you know, we may close the gap, right? Something like this for the next couple of weeks, you know, something like that, and then pull back and retest of the lows. Right, so I think that's what I think. That's the core scenario. That's usually what happens if there is no new information. Right, assuming there is no new information, then that's what's going to happen. And when I say new information, I mean like there is no big surprise, let's say tomorrow. Right, unemployment rate is still 3.5. We're still, you know, creating jobs. Non-farm payroll is, you know, 200,000, whatever, 300. You know, there are no big surprises, right? If unemployment rate jumps to 4.5, not tomorrow, Friday, you know, this could be a big surprise, right? We're in contraction on both manufacturing. On manufacturing data, you know, if we are jumped to 52%, well, that's a positive surprise. If you drop to 43%, that's a negative surprise. Then chart patterns don't really matter, right? What will matter is where the yield is going, right? So if yield rallies, LRCX is going to have a hard time going higher. If yield drops significantly, most likely LRCX will go up. It's in the next part, watch which was in binary yesterday. Yeah, PDCO, buying options on PDCO again. Richard, I mean, I wish you were in the live trading room. I did say PDCO options are probably not the best vehicle, right? Because it's not a very liquid name, right? It's not a very liquid name. So again, if I did say that if we do drop to 5 to 10%, you do not want to be down more than 2.5%. Right, so if $750 is more than 2.5% of your account value, I mean, that is something to consider in the future, right? If you did one contract, is this out of the money call? I mean, I don't know how many contracts you bought, but again, same thing. One contract of call, you trading $3,000, right? $3,000, it dropped 7%, you're down $250 should be the most, then. You're still within this range, right? You're still within the range. If you bought 3 contracts, right, and each contract you're down, let's say $250, right, 7%, $30. I'm going to assume it's, you lost $2 one contract, $250. 3 contracts, $750. So if you bought 3 contracts, you translate this into equity, right? That's $9,000. Let's assume you have $10,000 account, then that's too much, right? So if you're down more than 2.5%, I would consider doing less contracts in the future, right? Because PDCO is volatile. And again, if you're down 2.5%, I mean, it is recovering, but it closed this gap, right? This is an overhead resistance, major overhead resistance, so that's a problem. As long as it's below, it can drop and retest 200-day moving average. If it's able to push above this gap, right, this is kind of the line in the sand. Right, if it's able to push above this, then it potentially can close the gap on 50-day moving average. But right now, this is the major resistance, right? And unless it's able to break down, there is a likelihood that it's going to revisit support. So I guess the main point, there's always going to be winning trades and there are always going to be losing trades, right? The idea on the losing trade, you do not want to lose more than 2.5%. If you do, this is a lesson kind of to figure out that, especially when you see earnings, right? You going into the earnings, there's always a risk, right? Like HPQ or PDCO, right? Surprise could be to the downside or to the upside. So that's why I personally traded stock. And, right now I'm down less than 2.5%. I'm going to wait a couple of days and see where we are. If we're staying above 200-day moving average, I think that's a win for the bulls. If we stay above this resistance, that's a win for the bulls. If we drop, then I don't know what's PDCO trading now. So it's already been at 30. I mean, 30 put, September 15 expires in 2 weeks. Maybe I can buy it for 30 cents. So maybe that's a good way to hedge the stock. So 30. Okay. All right, so let's look. So thank you for bringing this attention. So now it did rebound, right? So what can I do, right? Stock is down. So one thing I can do is, even though it's a liquid option, it's a liquid stock, but I have a stock. So one way is to just buy a put, 30 put, right? For 30 cents. Okay, so I'm risking another 30 cents on one contract that's $30, right? I'm risking another $30, but there's 2 things are going to happen, right? There's 2 things going to happen. We're either going to revisit 29 and then I recover some of my losses, or we continue to go higher and try to close the gap, right? We're not going to just stay on this major support line, right? This is year-to-date high. We broke above this decisively on the previous earning. On this earning, we're decisively below that. So it's not the most liquid name, unfortunately. So at some point, people will have to make a decision. since earnings per share were in line, people might want to keep buying. But since the revenue they missed, people might want to sell. But at this point, at least I'm locked into the current losses. Well, another $30, right? So now we'll see what happens, right? But at least I'm not going to lose any more than, the below 30 level, right? I'm hedged up until 30 level, right? If it drops 29, 28, 27, I'm limiting my losses. Plus, I did not buy 100 shares. I bought only 50 shares. So that's the thought process. Richard, let me know if it helps. It's good to trade soon. So we did. So I did PWR, right? We did have a jump in PWR. So I'm half shares out. Question was on PWR. It looks like it's trying to break out. So, I mean, same strategy as PDCO, right? I bought half of the size in case it dropped. I was able to capture 1.5% move in a couple days. So now I'm trying to exit 215 and see if I can capture 3-4% move on PWR. So that's PWR. Also CLX, right? CLX. Similar story to PDCO, right? I bought it 164, right? It dropped to 152 or 150, right? It dropped 7-8%. Again, I only put half of the position. I'm down, $150, $200 on my position. Now I have to make it usually holds. It had the strong earnings. Now I have to make a decision. And CLX continues to go higher, right? It's trying to close the gap. Okay, I bought more. I bought the second half, $10 less, and now I was able to capture, 3%, right? And probably want to exit this position out completely. Break even on the first half, maybe 165. Let's put the second order. Sell the remaining at 165. So that's TLX, right? So, and that's kind of the lesson I learned over and over again, right? Because you do have these sharp moves to the downside, right? Whatever the news are, right? These earnings, Clorox, it's just XLP sold off, so it pulled the Clorox, together with other consumer staple stocks. But now it rebounded, and as long as I see some stabilization, day 1, day 2, day 3, okay, then this is time to buy, right? Because most likely it's just going to continue going higher, and we'll at least try to close this gap, right? So that's the thought process on CLX and PWR. Now PDCO is the same thing, right? PDCO, there's no difference, right? We are 200-day moving average. It's a problem, right? Now we're trying to reclaim this trend line. We'll see. By Friday, are we below this line or we're above this line? But now I have so I have 2 weeks to kind of see if I want to keep this position like Clorox or, just get out of the position. Thank you, Fred. Richard, hopefully it helps. Yeah, I mean, if you're down 2.5%, then I would say I would keep recording this, and I would still grade myself, either A or B, right? If you're down more than 2.5%, then it's C and D. I would make a note, like personally, in the future, just say, listen, maybe it doesn't make sense to buy options on the stocks less than 1 million shares. Like, that's my rule. That's why I trade PDCO, I trade stock. Google, liquid, I buy options, right? So in the future, that may be a way to go, right? But that's not like a rule that everybody follows. Maybe you're more comfortable, but at least you know that you cannot lose more than the value of your calls. So then you just kind of sit and wait, right? So that's also fine. right? Plus PDCO doesn't have weekly options, right? Usually I like to trade. If I trade options, I want to trade on stocks that have weekly options, because if the stocks don't have weekly options, then there is a lack of demand, right? There's a reason why PDCO doesn't have weekly options, because not a lot of people are interested in that stock. When you buy underlying stock because of the momentum or fundamentals, then it's fine, but options is a little bit different. If it's not liquid, it should not be on the watch list. Well, I give people choices, right? Stock and options, right? And you have a choice. Some people want to buy stock, some people want to buy options. Removing list from the options, maybe. Maybe that's an option. Just remove the options. But we do give choices, right? We do give choices, and some of these stocks model picks up, right? But some of them don't have a lot of options volume, right? So you have a choice whether you want to trade options or stocks, but okay. Maybe this is something to consider. Huge. Okay. Thank you, Richard. Or YouTube, thank you. So Alone is Alone there. Looks like on YouTube, blurry images. It could be some, let's see, I can look it up. YouTube. So first of all, thank you for participating and watching on YouTube. Blurry images. It could be some, let's see, I can look it up. Yeah, it is a little blurry. So first of all, thank you for participating and watching on YouTube. It's definitely a little blurry. Blurry images. It could be some. Yeah. Okay. So we need to try to work on the resolution. Okay. But thank you, Ian. Thank you. Bill, recovery plan. So hopefully PDCO, let me know if you still have a question on PDCO recovery plan. I'm going to watch, see if it stays above this trend line, and maybe it can close the gap. I would exit out if it try to close the moving, close to the, try to close 50-day moving average, I would exit out. If it and I have a 30 put, so at this point I'm hedged to 30, so I have 2 weeks to make a decision, right? If it drops below 200-day moving average, then I'm out of the stock, out of the put. If it stays above this level, then I have to make a decision. Can you split it off? I don't have Johnson & Johnson. I know that they're in the news on these merger acquisitions, spin-off. It was kind of a very strong move to the upside. Now it's a very strong move to the downside. News, event-driven trading, I usually don't do. I think they're so hard to predict. I have no idea, right? You got to follow some news that are very intimate with these details, and still, it's probably insider information, right? So you're always kind of at the end of the line reacting to this news. So I don't have an opinion on Johnson & Johnson. All right, let's go over the rest. So let's see where we are. Apple is up 1%. Google is up 0.5%. Spiders are up 0.5%. Dow Jones is up 0.5%. So it looks like market is slowly recovering. Fred, thank you. Thank you for your feedback, kind words. Okay, let's review the rest of the positions. All right, Best Buy. I'm out of Best Buy, right? This was the selling puts and call spread. Did trim Clorox, right? So I did continue to trim CLX position. It's rebounding, so maybe close to 164 completely exit. CVS is, let's see, doesn't look like it's, I mean, it's going through the bottoming process, right? Kind of classical bottoming process. It's not making new lows, so that's positive. It's not trying to close the gap or even reactionary session high from the, news from California. So that's negative. But for now, it's not making new lows, so I'm not down more than 2.5%. I'm watching, right? I'm watching what's going to happen with CVS. KRE is in the news again. More, tighter lending conditions, wider bid and ask spread. Bottom line is affected. Still below 50-day moving average. So far, very weak rebound compared to QQQ or spiders, right? So XRE continue to KRE continue to underperform spiders and QQQ. And spiders is, so it's trading above this broken trend line and retesting this level at 453. So still bearish, but the time is against me, right? We have this week and next 2 weeks. So in the next week, ideally by next Friday, I want to close regional banks. We'll see how it reacts to unemployment data, but the time is running against me on this 45-35 put, and KRE is at right below 45, below 50-day, right at the 50-day moving average. It's not breaking out, so we'll see. Maybe there'll be another leg down in the next 2 weeks in regional banks. And same thing with XLF. XLF is doing a little bit better than regional banks. It has rebounded significantly, reclaimed 200-day moving average, 50-day moving average, facing this, overhead resistance that spans over a long period of time. This is the initial breakdown. It's trying to close this gap. So, overbought, right? Short-term overbought, and in theory should pull back. The question is time, right? Is it going to happen by September 15th? That I'm not sure. Eli Lilly continues to grind higher. So still have a position in Eli Lilly. We talk at length about PDCO, right? So I did buy the put to hedge, so I can make a decision on about PDCO. Trim PWR, still have half of the position left in PWR. And then QQQ. QQQ September puts will expire worthless. 360, 340 put spread. I have October. That's my main hedge right now for the months of October. It did pull. I closed half of it. At some point, I will buy it back. The second half of the QQQ spread. I think, at some point it's going to start losing momentum. Maybe close to 380, 383, and if I start seeing losing momentum, or if it reverses down, maybe once it's below this trend line, that would be probably a signal to put this, to add back the hedge. If you're not comfortable trading options, I encourage you to buy stock, SH, right? SH, buying SH. TLT looks like it's slowly rebounding. Still not out of the woods. I would watch. I mean, 30-year yield already turning positive, so that's not good. And 10-year yield touched the support line, right, which is a very strong support line, and at least for now, bouncing back. So I would watch the yield. If 30-year continues to turn in positive, if 10-year continues to turn, that would be negative for the market. But dollar goes the other way. Dollar kind of a strong pullback, which should be good for value stocks and silver on precious metals. Today, value stocks are in line. All right, any other questions? Discord guys, thank you for participating. Any questions? Right, 9:06. Okay, half an hour. Let's see what stands out. I mean, yield kind of not going anywhere. Dollar did pull back. That's positive. Dollar continues to pull back. Spiders up 0.5%. QQQ up 0.5%. UNG is up. Bitcoin slightly down. Let's see, energy, XLE continues to grind slowly higher. That's about it. So AT&T is going up. PDC kind of scratching its head on this line, trying to figure out what to do next. PWR continues to grind higher, up 1%. Clorox looks like grinding higher, and that's about it. PDD is out, and I know Best Buy is out. Okay, any other questions? Larissa, Alon, Bob, Carol, Chen, Dan, Don, Eric, Faust, Fred, Haiju, Han, Harminder, Ian, Jeff, John, Cool, Mario, Martin, Michael, Patrick, Peter, Raymond, Richard, Todd, Mark, Vamsidar, Bill, Y. All right. 9:08. Let's see what else. What are the main news from today? Pending home sales jumped 0.9%. Second estimate of second quarter GDP was marked down from 2.4 to 2.1%. Price deflator, GDP price deflator marked down. That's good from advancing estimate of 2.2. PC data revised lower, 2.5, 2.6. That's good. Thought PC is Thursday. Yes, PC price inflator already been announced. Okay. Also, there are downward revisions to the inflation reading. So it looks like inflation readings are down. I mean, not major move like we had yesterday. I would say more flattish. So no new information. That's how I usually classify this. How's Germany doing? Germany is in the news, possible recession. So yeah, it dropped below 200-day moving. It did rebound significantly. But still pretty bearish price pattern. Okay. John, thank you. Mark, thank you. VIX has dropped. Is it good to buy a call? I mean, I've been disappointed with VIX and VXX. A lot of you complain about robo-investor and VXX. So, I mean, obviously, if you want to buy calls on VIX, you're concerned about market correction, or this rebound is way too much, right? So my idea is that right, if this is A, right, and this is B, right, and if assuming we do have C, right, the best way I think is trade something liquid, which is QQQ. I mean, VIX is liquid, but again, I mean, personally, I'm staying away from VIX and VXX. From now on, if I want to hedge, I can buy PSQ, right, or SH inverse ETF, or if you want to do options, buy a put on QQQ, right, buy QQQ put spread, right, if you believe that this is going to be the next move in the market. And I'm not saying straight line, timing perspective, something like this. Something like that. See you at the closing bell. Thank you. Today's what? Wednesday? Yes. So Scott, I'll see you guys tomorrow morning. Start from stock position. In all my positions, and it's very important to review recordings, right? They're available for everybody. Right, even if it's closing, even if it's all the opening bell, closing bell, you have to be an elite subscriber. I know a lot of you are not elite subscribers, but all of the recordings are posted on Tradespoon site, event recordings, and on Yellow Tunnel, right, trading recordings. So please watch them, right? I mean, obviously you can always ask me if I have a little position in option. I'll be more than happy to answer. The answer is no. I only have stock. Right, but it's important to read the commentary and watch the commentary. Right, you can't really trade in a vacuum. Just because I have PDCO or Monster Beverage and there's an option portfolio, that doesn't mean I'm buying it, right? Or doesn't mean it's good for you to buy it. Maybe it's good for somebody else to buy. But you just keep in mind that we have thousands of subscribers, literally thousands of subscribers getting SMS message. Some people love trading options, some people don't. There's no one cookie cut solution for everybody. So it is important to watch the recordings. I mean, obviously you participate in live, that's great. Please ask questions, I always answer them. And if you're not able to participate, please watch the recordings. You will know exactly through the recordings whether I have what LA Lilly, whether I have stock or option, right? Because it's a symbol, description, cost basis, current price. So I don't have options, right? If I show the screen and I say, this is my position in LA Lilly, I don't have any secret position somewhere else, right? This is all I have. Same thing goes with PDCO, right? I think it's the most common. I mean, you can always say, okay, software should remove this. Okay, fine, software should remove, I get it. But just realize that there is no such thing as one solution for everybody, right? And maybe for somebody it makes sense to buy PDCO calls. Maybe for somebody it doesn't make sense. To say it like it's, just don't do it for everybody is also not correct, right? So I'm not trying to defend myself or trying to kind of rationalize this. I'm just saying in the future, it's very important to look at the videos, right? The recordings, right? And I don't think it's enough just to get a view and trade, right? Because, if you're questioning some of these issues, then maybe you just don't have your own trading plan, right? So if you don't have your own trading plan, then it's important to watch the recordings. If you do have your solid trading plan, then you really don't need my opinion, whether you should trade stock or an option, right? This is something you already know. And if you don't already know this, or you don't have a solid trading plan, then you got to watch the recording, because that gives you context, it gives you a background of what I'm doing, right? And obviously I'm spending a lot of time going through that. All right, so no closing bell. Scott will do the closing bell tomorrow morning. So tomorrow morning, let's reconvene, and thank you very much, and have a great day. Thank you. So, I have stock. LA Lilly, I have stock. I'm still waiting. I think LA Lilly has more room to the upside. Bill, thank you. Ian, thank you. John, thank you. Jeff, thank you. Faust, thank you. Everybody, thank you very much. Have a great day. And I will see you tomorrow morning. Thank you.